into it. Julia, your thoughts on the sell-off? What was behind the losses?
James, it was a really disappointing day on the market, and really if we have a look at what drove the market lower, QBE Insurance had a massive impact on the market, wiping about 15 points off the benchmark index, and the banks also having a very bad session with the big four banks all trading lower. Now that's despite the US having a very good session on Friday. The non-farm payroll numbers better than expected, and we saw the US stock market gaining more than 1%. But after the bell, we did see a report coming out from Fed watcher Hilsenrath saying that the Fed could taper as early as that 16th and 17th December meeting. But still, Asian markets didn't seem affected. We saw the Japanese stock market up by 2% today and the Korean market up by 1%. So the Australian market really bucking that positive trend that we've seen in both overseas markets as well as around the region. And unfortunately, it's been QBE, the banks, doing most of the damage, and the selling has been on higher volumes. We've seen about $4.2 billion going through the market, about $500 million of that being related to QBE Insurance. So the fact that we saw heavy losses with higher volumes doesn't bode well for the market.
Bring it in December and likely impact on the market?
Well, the fact that Hilsenrath did come out with an article will be keenly watched by the market, so it's going to be very interesting to see that US market reaction tonight. We are seeing the futures, though, the US futures up by 0.2%, pointing to a positive session. And it may just be that the market is getting used to this talk of tapering. It's getting a little bit more comfortable that the US economy is performing very well and that the US economy will be able to ride through a bit of a pullback in that $85 billion worth of quantitative easing that we're still seeing every single month. If we have a look at the market and some of the concerns in the market, I guess one of them is the banks at the moment, that they are quite overvalued. And what we're seeing in terms of the banks is a deteriorating earnings picture. Earnings in terms of the last year of financial year results that we saw growth of about 8%. If you strip out the bad debt component, that was growth of about 5%. And the consensus for the current financial year is that we're going to see growth of just 5%. So if you have a look at buying into companies and they're only growing at 5%, you don't expect them to see another share price performance where you do see an increase of 40 to 50%, which we have with the banks in the last 12 to 18 months. So really with the banks looking overvalued, but I guess the talk of tapering would be bad news for a market like Australia, where we are heavily weighted towards commodities, and there's a lot of stocks which are also exposed to the currency. That could be good news. If we do see a continued fall in terms of the Australian dollar, we'd be watching companies like CSL, like ResMed, like Crown, which would benefit from that lower Australian dollar.
Let's talk the big one of the day, Julia. QBE made mention of it a little bit earlier on. I would have thought worryingly they closed bang on their low of the session, in the end closing down over 22% at $12. What does the short-term future hold for this stock, do you think?
This is looking extremely bearish from a trading point of view and a technical point of view. If I just bring up QBE Insurance share price throughout the day, this is the intraday graph, and you can see coming into the close that we did see quite a steep slide in QBE Insurance shares. So closing exactly on that $12 mark, that suggests that there is more selling to come for QBE Insurance. And it's very disappointing because there were a lot of buy broker ratings on this particular stock. It's one of those stocks which does benefit from an increasing interest rate and also a stronger US dollar. And that's forecast to continue in terms of the US stock market, and that's supposed to be good for QBE Insurance. But the problems that we are seeing in terms of the US, the massive write-downs, means that the market's a little bit nervous, and is probably also quite nervous from the capital adequacy ratio point of view as well, on whether it will need to raise capital. Now, QBE Insurance has come out to say that it is looking at a $500 million convertible debt raising, but if we do see a downgrade coming through from Standard & Poor's, that's really going to stoke fears in the market that we might see another capital raising by QBE.